Yet another incredible close to the week has just happened. We had the Fed actually holding rates, but there was a bit of dissension amongst the ranks. On top of that as well, we actually had a bit of an economic slowdown occurring. And we've also had intervention in relation to the Japanese yen by the US Treasury. Earnings on top of all of that. As well, American attacks resuming in Iran, and Israel getting involved in the conflict as well, on top of that as well too. And then, just this weekend, we basically had a lot of calls in terms of cancelling that attack. So much going on overall in relation to economics, geopolitical warfare, all of those kind of things going on. Let's take a look at everything that's going on, see if we can make sense of all of that, and see what we can do in terms of making some plans in relation to the upcoming week. Stay tuned for everything. Hello, everyone, and welcome to Strategic Markets, your place for fundamental and technical analysis for a whole range of markets. Now, what a week this has basically been, or towards the end of the week, because I caught up with you midweek and everything was just basically waiting in terms of seeing how everything was going to go with the Fed meeting. Well, that Fed meeting happened, and like I mentioned on Wednesday, this was going to be the chart in particular that you needed to really keep an eye on. And sure enough, that particular idea was exactly right on the mark. This big red candle, you can see that right here in terms of that Wednesday trade was exactly what basically occurred. This chart here, we're looking here at the TLT. Now, in terms of the TLT, what exactly happened? Well, overall, you can really see that the respect of that quarterly VWAP being this pink line was exactly what really did occur. And overall, as soon as it actually hit that quarterly VWAP, it just smacked it and went south straight from there. And it didn't stop. It basically went straight down 1.6% in one day. Now, for the actual bonds market, that is a massive move. Now, what essentially happened? Well, let's have a quick look at this chart more than anything else. As soon as it kept going down, it just kept going down for the rest of the week. So that's really essentially it. As soon as it respected that quarterly VWAP, as well as those short-term moving averages, it's been keeping on going down. And it looks as though we can probably expect it to keep going down as well, considering we've got a dividend payment on the ETF as well, about to occur on Monday. Okay, let's have a look and see exactly what did happen. Because essentially the divided Fed, as they're basically putting it, has decided to hold interest rates steady, which you would expect basically wouldn't have much of an impact on bonds themselves or on the market for that matter as such. But what the market has essentially picked up on overall is the fact that three of the members themselves had actually voted and dissented against that and voted to hike. So three of the regional presidents themselves, Beth Hammack of Cleveland, Neil Kashkari of Minneapolis, and Lori Logan of Dallas, had basically actually dissented in terms of basically saying that they wanted the actual interest rates to rise because of the fact that inflation itself has remained above the Fed's target of 2% for quite some time. In fact, more than 5 years. And they're basically saying it's out of control. We need to really get it back down. On top of that as well, like Yash had said before he actually went on holidays as well, Kevin Walsh himself has actually argued for quite some time that the markets, that he's actually going to be giving fewer signals to the market about central banks' next move overall, in terms of any of the meetings upcoming. Now, whether or not you can basically take that in terms of the fact that the market is now getting more and more wary of exactly what's going on, well, I'll leave that to your actual thoughts overall. But you can really see overall that the target rate itself is now staying well above what the inflation rate itself that they actually want it to be in terms of around about that 2% band. That can be considered quite concerning overall. So let's just wait and see exactly what's going to be happening. But overall itself, we are really seeing these bonds coming down quite substantially. And that is really reflected in relation to that particular TLT chart. On top of that as well, you can really see now that these yields are rising substantially and rising substantially very, very fast. We are moving away from the short-term moving averages quite incredibly now, and we are very, very much well above all of the moving averages now. And we can really, really say with quite a lot of certainty, we are heading higher for longer for a substantial period of time. Did it have a major effect in relation to the markets overall? We'll come back to that shortly after we have a look through some of the other headlines. Another really big, interesting thing that actually occurred later in the week as well was the economic growth has actually seen a surprise slowdown, especially in the second quarter. But let's dig into this a little bit deeper. Essentially, the US economy itself grew at an annual rate of around about 1.5% in the second quarter, down from 2.1% seen in the first 3 months of the year. They're actually expecting it to remain around about 2%, so it's well less than what they had actually expected overall. Consumer spending, which accounts for more than 2/3 of the economic growth activity in the US, grew at a rate of 3.2% last quarter after slowing to 0.5% earlier this year. And this could actually be influencing inflation as well too. So that's one of the biggest things to really consider there too. And on top of that as well, despite prices rising at 3.5% in the year to June, Americans themselves are still continuing to spend on motor vehicles, light-duty trucks, furniture, prescription drugs. So there's a lot of expenses still actually occurring overall. Now, the biggest thing about this as well too is separate data in relation to cost of living was also released on Thursday. That's the PCE in particular, Personal Consumer Expenditures Price Index, a measure of inflation, and that increased by 3.7%. These are all really concerning figures because it's basically showing that inflation itself is actually rising quite substantially overall, tending to suggest that we are more than likely going to be actually having higher increased chances of rate hikes more than anything else overall in the near future. And combine that with the fact of what we just saw in the charts a few moments ago, being the TLT going down substantially, as well as the TNX being the 10-year rates rising, it seems to be really suggesting it and backing up this even further evidence. So keep an eye on all of these kind of aspects because that just seems to be the picture that's really unfolding. But is this much of a surprise? Well, you can go back to a few videos we actually presented previously as well, and we were presenting this picture quite convincingly there as well too, especially when we were basically seeing that CPI, which was presented previously as well, being a lagging indicator. And you're taking into consideration as well about Brent Crude. Now, we were talking about this, and we take a look back at Brent Crude as well in particular. We were talking about this as Brent Crude was starting to rise. And all of these figures that were coming out as well in relation to all of the CPI figures were saying that CPI was coming down and inflation was coming down and, oh, everything's all nice and rosy. But this was talking about CPI figures as the price of Brent Crude was coming downwards. Okay, all wonderful and hunky-dory about all of those aspects. But if you're measuring CPI as it's all coming down, then sure, CPI will be coming down at that aspect there, and inflation will be coming down at that stage. But what are we going to be expecting as Brent Crude is rising and all the costs are incurred in terms of rising as well too? Now you're starting to see that happening. And we were talking about that at that stage. You're now talking about the inflation coming through, rising. So this is the problem when we start talking about CPI, which is a lagging indicator, and relying on CPI as a lagging indicator. We need to start thinking about all of these in terms of the forward motion rather than aspects there. But this is the problem. CPI lags, but we need to also start thinking in terms of what could be going on in the future if we're going to start making predictors. But we need to be cognizant that CPI is a lagging indicator, not a forward-looking indicator. Unfortunately, people interpret it as a forward indicator, and that's the problem. Okay, so that's a major issue there. Now, the other big issue, let's have a look at this. This is something really, really interesting that happened towards the end of the week in terms of on Friday. The US Treasury bought a heck of a lot of yen on Friday. Japanese currency has been battered quite significantly, and they're trying to prop it up and get things moving overall. Now, I love the story in terms of this. Basically, there's apparently a Reuters photo of Scott Bessent's notepad, and it was basically saying, to do, buy Japanese yen. Oh, maybe $5 or $10 billion should do the trick. That's a really nice little note to basically make on your notepad, isn't it? But apparently, this is what actually had happened in terms of things, and they thought, all right, well, we'll try and do this. The last time they basically did this in terms of actually a really major supportive action was apparently back in 2011. following a major earthquake and tsunami event that actually occurred over in Japan to try and stabilize the aspects back then as well too. Now, an interesting thing to remember about all of this as well too, having a direct supportive aspect in relation to trying to buy a large amount of a currency can have an influence on your own currency as well. And also these kind of aspects as well too can also have a major impact in terms of markets overall as well. I'll show you what I mean. Now, a well-known indicator as well about this is also the relationship between the Australian dollar and the Japanese yen as well too. Now, in terms of things, this interesting purchase that actually occurred on Friday did have a major impact in terms of the Australian dollar and Japanese yen. You can see that with the green line here. Now, it doesn't really show up very, very well because it's actually overlapped by the S&P, which I'll hide for a few moments, and also hide the Nasdaq one for a few moments as well. But you can see that there in terms of a major decline that actually occurred on Friday with all of this buying that occurred. Now, you have to remember as well, this is actually showing Australian dollar over Japanese yen. So if you're thinking in terms of buying Japanese yen, the Japanese yen strengthens and rises in that way there. So if you talk about Japanese yen over Australian dollar, then that would be saying the Japanese yen would rise. So Australian dollar over Japanese yen basically means the inverse, and the Australian dollar would then go down. So that's the reason why it's going downwards instead. Now, I'll bring back the S&P. Cancel that. I'll bring it back, and I'll bring back the Nasdaq as well. But what you'll find in general is whenever you get a rise in the Australian dollar over the Japanese yen, this is normally supportive for the markets. When you have large sustained reductions in the Australian dollar over the Japanese yen, you'll generally find the markets will fall, which is a very, very interesting association. And you can see that in terms of, say, like one of these particular moves here, where you actually had the Australian dollar over the Japanese yen falling down here, and it really, really did have an impact in the markets overall as well too. And it does happen over time. So keep an eye on this. If we have a major sustained fall actually occurring because they're really trying to prop up the Japanese yen, we may actually have an impact on the markets overall as well too. But you can really see that over time, if you have this Australian dollar or Japanese yen rising over time, you do actually have an improvement in the markets overall as well. Here's another example of where we actually had declining over time, and well, it didn't really happen too much here because it actually stayed stable. But as it fell, you did have a fall here as well. That happened in 2020 in terms of associated also with the COVID pandemic too. So it's very, very fascinating when you actually see these associations actually occurring. If we go back to 2011, I can show you the impact that actually occurred at that stage as well. So in terms of 2011, we actually had the decline that actually occurred from around about April when they started propping the Japanese yen up after that earthquake and tsunami. There was a decline there, and correspondingly, the markets themselves, the red being the S&P 500, the blue, light blue I should say, being the Nasdaq, and also the dark blue being the Australian All Ordinaries. And they all fell in correspondence with the Australian dollar over the Japanese yen when they were propping the Japanese yen up. So definitely do keep an eye on these kind of relationships that do occur. Now, not always, in terms of some of these declines where you actually do get also some of the increases that actually occur opposite them as well too. So there can be some other factors that do occur, but it's an interesting correlations that do actually occur in some of these markets at times as well. So definitely something to observe. But what else happened this week? US war on Iran. Is it just the US though? Not necessarily. It's also, in terms of the way things have been going recently as well, Israel have been involved yet again. Surprise, surprise. But essentially the Israeli military have been carrying out, like it basically says down here as well, towards the end of the week, large detonations across its zone of occupation in southern Lebanon overnight. So there's a lot of factors going on in play in terms of the war over in Iran and the Middle East as well. So there's been lots of explosions near towns and villages. I won't even try to pronounce some of those, but essentially a lot has been going on over in the Middle East, and Israel unfortunately look as though they've been trying to take some advantage in relation to all of that. So that's been going on, And there have been lots and lots of talk, especially from President Trump's perspective as well, in terms of bombing the you-know-whats out of everything that's been going on there too. But interestingly enough, over the weekend, it's now the weekend, I'm going to release this tonight in terms of Sunday here over in Melbourne, and we'll basically get it across to everyone by Sunday over in the US and the rest of the world. But essentially, a lot of countries in the Middle East are basically saying, hold back. It looks as though the perimeters of a deal, that's basically what the words are, perimeters of a deal have been agreed to, including the reopening of the Strait of Hormuz. Well, we'll wait and see. But as President Trump likes to say, we're close to a deal. But how many times have we heard this? Let's see how things do definitely go. But it all comes down to not just the actions from the US, but it's also going to come down to the actions from Israel, because essentially they have killed at least eight Palestinians across the Gaza Strip just in terms of the end of this week. And I'm pretty sure that the forces that be are not going to be very, very appreciative of that kind of aspect as well too. And it's quite a lot that's basically been going on in relation to all of that. So watch this space area. It's very, very tense. There's a lot of aggression going on at the present time overall. Okay, so now we've got all the fundamental aspects out of the way, and we can really see that there's quite a lot going on. Let's now take a look at exactly what is happening in terms of the charts and see if we can make heads or tails of exactly what's going on overall too. Brent Crude. We can really see in terms of Brent Crude, especially talking about the war aspects, that we've essentially been bouncing off these volume profile areas from 2023 since midweek. And we were talking about that midweek as well, because essentially we've got this big green candle here from Wednesday, which has aligned perfectly in terms of bouncing off those volume profile areas, as well as that quarterly VWAP being that pink line. We are now currently testing the yearly VWAP being this green line. Will we stay above it? Well, now it all comes down to the geopolitics that is going on exactly right now. Will there be some form of a peace deal coming on? Will all sides of the table come to the table and basically say, yep, everything's all A-OK, and will some form of a ceasefire actually come along? It's all coming down to that. Until everything starts getting sorted out in one way or another, you can really see that we are in a range, and it has really formed quite solidly based on things from that volume profile area from 2023. And that's very, very solidly formed from 3 years ago, I should say, and from March. So we're sitting along things that have actually been here for quite some time. Let's see whether or not we get a breakout one way or the other in terms of above the area of $100 or below the area here of around about $85. So that is where we're playing at in terms of Brent Crude. In relation to USO, it's fairly much exactly the same as well too. We've got the VWAP down below here at around about $114, and we've got the high over here even from around about $140 from the level around June. They are your ranges to be basically working from overall based on what the charts are telling you. Now, if we take a look over at the SPY, we can really see more than anything else, and this is very much along the lines from all of the indices overall from the US. We had a retracement back down to lows below where they were previously trading, except for the Dow. We had lows that were formed, and then we came back upwards to test previous areas. But there are some differences and divergences forming between the major indices. It appears as though the SPY and the Dow have a little bit more relative strength compared to the Qs and the Russell. Well, in terms of the Russell, you can probably look at that and say, well, there's an obvious reason behind that, and that would be the bonds, because the bonds and the yields have a relationship there, and the Russell essentially is borrowing funds more than any of the others. They're heavily reliant on borrowing and heavily reliant on interest rates. The SPY, though, seems to have a bit more strength overall. You can see it actually closing above the quarterly VWAP as well as the short-term moving averages. So the big caps appear to be having a little bit more strength overall. Whilst we're looking at the big caps, let's take a look also at the Dow then as well. So let me scroll down there. And you can see in terms of the Dow, and I'll bring up the quarterly VWAP through the use of the diamonds, and you can see that it's closed above that in terms of the quarterly VWAP. But we'll switch back across to the Dow now so you can actually see a bit more robustness in the charts. But that's actually bounced right off the 50-day moving average there for the Dow, and it's frankly very, very clear above the short-term moving averages there as well. So there's definitely some strength there after falling 2% on the Wednesday, 1,100 points, and that made headlines everywhere. But interestingly enough, note with this particular candle, the low of that particular candle did not go below the low here of this swing low here. So this is the reason why I'm saying there's a bit more strength in the Dow compared to the other indices. Now, if we go across to the Russell while we're here, you can see the weakness is still there in the Russell. We're closed below the 50-day moving average and we're below the short-term moving averages there as well. So let's see whether or not we're going to actually form more lows here, because this low here on the Friday was actually lower than that particular swing low there, even though we've actually wicked and we've closed a little bit higher than that particular low. But are we going to form more lows here and potentially go down towards the 100-day moving average? Anything is possible. There is more weakness here, and especially with the bonds being as weak as they are, that could translate into further lows here in the Russell. And we'll go across to the Qs here as well, because the Qs themselves, even though there has been this rise over the last couple of days, we're still trading below the quarterly VWAP, we're still trading below the 50-day moving average, and we're still trading below the short-term 15-day EMA. So there's some very, very interesting dynamics coming into play, even though we've bounced off the 100-day moving average. So there's some very, very key aspects going on here. You might be saying, Steve, look, that last 2 days, pretty good. Yeah, take that with a grain of salt. There's been some mixed aspects in terms of earnings. Amazon, amazing earnings. Blew past everything. No doubt about that whatsoever. Microsoft, amazing earnings as well. No doubt about that whatsoever. Blew past the 200-day moving average, blew past the 150-day moving average, blew past the daily VWAP, or the yearly VWAP. Incredible. But we have been dragging down by Apple. They had earnings, went down below quarterly VWAP, short-term moving averages, and the 50-day moving average. Okay, not all that fantastic, even though its earnings were a surprise and it blew past revenue. Okay, so it had a fantastic earnings release, but a poor response. Went down 7% on Friday. This is where earnings are a coin flip. I'm always saying that. Anyone who knows me always knows that I'm always saying that. It doesn't matter what the earnings are. You can have a bumper earnings report. It's how the market responds to it is the most important factor, without a shadow of a doubt. So always see what the market reaction is to something rather than worrying about how good or how bad an earnings report is. You can have a rotten earnings report, but if the market responds magnificently to it, then all shareholders are happy. That's the biggest thing there. Meta, not a good earnings report in terms of Meta. Okay, surprise to the downside. Revenues were okay, but really rotten response. Okay, down 8% on Thursday. But it's recovering. It seems to be recovering okay. Whether or not that's going to be a dead cat bounce and then all of a sudden it goes wonk, we'll wait and see. But as you can see, 4 of the big caps that have actually reported this particular week, 2 of them were great, 2 of them not so great in terms of market response. And we're starting to see that in terms of reflections in the Qs, a bit of indecision. Okay, we'll go back to the Qs and you can see that, right? A bit of indecision, especially on Friday. You can see that in terms of the Friday. We had a jump up, we had a gap up on the Friday, but it closed lower, closed below that 15-day EMA. So we've got a lot of indecision as to exactly where the market's going to be going in relation to the Qs. There's still some weakness there. You'd really want to be seeing a nice close up above the quarterly VWAP and really starting to challenge that 50-day moving average before we can really say the Qs are out of trouble. We're still forming lower highs and lower lows, and we are not seeing a break in that trend at this point in time to say the tech is out of trouble. To really illustrate that point, let me bring up the semiconductor ETF. Now, if you can tell me that's higher highs and higher lows it's forming there, well, I can tell you this much, I'll give up anything in terms of what I'm doing in terms of technical analysis. But that is not higher highs and higher lows that are forming there at all. Even though you can see that technically, from the VWAP perspective, the buyers are still technically in control. On the yearly basis, if they'd bought way back when, right at the beginning of the year. But on the quarterly basis, anyone who bought around about up here is losing money. That's the way you've got to be able to interpret these kind of things. So I'll leave you with that. And take a look at SpaceX. That's an absolute nightmare. Okay, so there's a lot of things that are going on in the tech space, which is an absolute dog's breakfast. Earnings, by the way, coming up shortly in terms of SpaceX. Watch this space indeed. Okay, so that's a big thing there with all of that. How's volatility going? We'll check it out. Volatility, doesn't seem to be really existent at this point in time. But don't get too complacent about that. We could have a spark up in all of this, and then all of a sudden we could be off for the races in terms of volatility as well. There's a lot of movement going on. Just for some strange reason at this point in time, the option market makers are basically throwing it out the window and they're not worrying about this too much. They're not worrying about buying put protection or anything along those lines at this stage. So, but that can also be reflected in the mere fact that the SPY in particular is actually trading above all the short-term moving averages, and they're not too worried about the components of the SPY, because that's what the volatility or the VIX is actually measuring. All right, the dollar was another interesting chart as well too. Now, why did this go down? Chances are the reason why this was going down towards the end of the week is directly in relation to what was going on in terms of buying the yen. That seems to be the situation there, because as you can see, even though the media was reporting the fact of buying the yen at the end of the week, why did the Australian dollar Japanese yen start falling from around about Wednesday onwards? I'll leave you to ponder that, because the dollar started falling on Wednesday as well. So there's been some major currency moves going on all around that time. Very intriguing stuff. All right, how about other areas? Let's have a look at gold while we're here as well too. Now, gold, interestingly as well, actually did have a bit of a spark up from about Thursday onwards as well too. So maybe there were a few people trying to hedge their bets a little bit there as well when the currencies were all changing around and saying, okay, we may as well put a little bit here too in terms of a safe haven, potentially. Well, we'll see. We should actually be looking at this as well on our normal charts on top of things as well too. And we'll move across to the gold futures. Let's do that indeed. Here we go. There we are. Now, interestingly enough with this, have a look at the lagging indicator. It's actually broken up above the unit prices, and we've also had a crossover of our Tenkan-sen above the baseline. So we could actually be having some potentially sustained move here in gold as well. Let's see what this retest of the prices is actually going to do, and whether or not it stays up above these short-term moving averages and the quarterly VWAP in relation to gold. We could be potentially having a move on our hands. In relation to silver, still fundamentally weak, or in terms of the technical aspect anyway, but still technically weak compared to gold. So if I was to basically go from either one or the other, gold would personally be where I'd be looking at myself. Not financial advice, obviously, but looking at these particular charts, gold appears to be the area to look at more than silver at this stage. Interestingly, copper is starting to make a bit of a move back up again as well. That could also be a reflection in terms of the market overall. I wouldn't be thinking it's a reflection in terms of technology, but overall with the big caps, it appears as though something's going along there. Iron ore is looking dreadful, and I mean dreadful with a big capital D. That is absolutely awful. You can really see that is a major downtrend in anyone's books. It is absolutely broken support all the way through, and that has really occurred ever since Wednesday. That is absolutely awful. Okay, now let's have a look over at Bitcoin and Ethereum and all those kind of things as well too. I really am glad that Yash did decide to take a holiday because this has really done nothing. If anything, is probably just edging downwards, and I don't think he'd be very happy with that. By the way, welcome back, buddy, when you get back. I'll see you Wednesday. But overall, this is not looking all that terrific. It really did not have a good move on Friday. That actually just plunged right back through the short-term moving averages and the quarterly VWAP after trying to bounce back off it towards the end of the week. And it's trying to make its way back up this weekend. You can really see it actually trying to get back through the support line, which is now the resistance line, um, back from April 2021. So, yeah, not having a good time of it at all, actually, at this point in time. And we've also got, unfortunately to say for anyone who actually is a crypto holder, we've unfortunately got the Tenkan Sen dipping beneath the baseline here at this point as well, too, looking at the left-hand side. So Bitcoin not looking all that great. Ethereum, let's have a look at that one. That's still holding its own, but it does look like it's actually forming lower highs and lower lows with the lagging indicator at this point in time, even though the Tenkan Sen is still above the baseline at this stage. But we are actually respecting the declining 100-day moving average for quite some time now as well, actually, ever since about beginning of last week. And even though we are also staying above the quarterly VWAP at this stage, but there just doesn't seem to be much inspired buying getting involved in this. And you can see that as well by staying below those short-term moving averages at this point. So yeah, there's not really much happening. But there is a positive. It is staying above the support line from April 2025 at this point. So things looking okay. And it is also staying above the cloud. So it emerged back from the cloud after trying to get below it. So there's some positives going on there. How are the other ones going that we were actually keeping an eye on before? Link, neutral, I suppose, at this point. Not really doing all that much in terms of chain link. Bounced off the 50-day moving average. You can see just over here. Bounced off the quarterly VWAP. Not really doing much more than that. Litecoin, yeah, pretty much the same. Not really doing all that much either. Ondo did reach Yash's target of 42 cents. That's pretty cool. And staying amongst the short-term moving averages. Also, I suppose lagging indicators looking reasonable, starting to form lower highs and lower lows though, but Tenkan Sen is still above the baseline, and it's actually staying above the cloud. So that's looking reasonable. Tron. Wow, what happened there with that tail? That zoomed out of there well past the 100-day moving average. So anyone who had stops up around about here would have been taken out in terms of a small amount of their position at least, so that would have been all right. But yeah, it's just all over the place, isn't it? So, yeah, interesting one there overall too. Yeah, and Zcash, yeah, it's just bopping along, doing its own little thing. So yeah, some interesting ones around the place, all over the place there as well too. Okay, all right. Well, whilst we've got a couple of moments on our hands as well, let's have a look at the sectors quickly as well too, I reckon. Why not indeed? All right. So there probably has been a bit of change, especially with some of the earnings coming through as well when it comes to the sectors too. Materials, still fairly much a dog's breakfast. Tried to break out above the short-term moving averages and everything there early in the week, but really hasn't done much, just basically sunk down beneath them all again and is now stuck amongst it all as well too. XLC would have been affected by Meta. It certainly was. Got affected by Meta, trying to break back above everything again as well, but it's now stuck beneath the short-term moving averages and the quarterly VWAP. So that's gone back into a fairly weakish kind of position. Tenkan Sen has now gone beneath the baseline as well. So yeah, that's not looking all that strong at all. So yeah, maintaining a fairly weakish position there, especially after it actually attempted to get through the quarterly VWAP, but it really did fail. Energy, maintaining a good, solid, positive position and positive momentum here overall. Testing through the short-term moving averages here, doing okay in that way, and the lagging indicator is looking very nice, staying above the cloud as well. So going pretty well there overall. So full steam ahead by the looks of it in terms of energy. Financials, fairly much the same. higher highs and higher lows of the lagging indicator, and also testing the Tenkan-sen and doing quite nicely in relation to that. Also staying above the short-term moving averages as well as also testing that quarterly VWAP, as you can see, and also maintaining itself quite nicely above that. Industrials has weakened a little bit. I can see that as well, also since Wednesday, and that really had a shocker on Wednesday. Actually, take a look at that. But overall, it did test that 50-day moving average and has come back above it, but it's struggling against that quarterly VWAP, as you can see, and also struggling against the short-term moving averages as well. Lagging indicator came back down below the unit prices, as you can see overall there, and on top of that as well, we're actually now maintaining the baseline above the Tenkan-sen. So, positive aspects there are pretty much now removed, unfortunately. Technology, no surprises here. It's pretty much along the same lines as what you see with the Qs, and fairly much, we're forming lower highs and lower lows with the lagging indicator, and on top of that as well, we're basically seeing the baseline consistently above the Tenkan-sen. So we're fairly much in a negative downtrend here. Consumer staples looked like it was actually really trying to actually break out and stay up above everything else as well there. But it's actually now just returned to the quarterly VWAP. Whether it stays up above that because it's staying above the yearly VWAP, we'll just have to wait and see. We've got the Tenkan-sen above the baseline at this stage, but the lagging indicator has really come back down. So watch and see how this actually reacts to the unit prices would be the best way to go with that. Real estate. Very similar situation to consumer staples, actually. That's come back down essentially to the quarterly VWAP. Also tested the 50-day moving average at that point as well. But you can really see here as well that the short-term moving averages have turned downwards on top of that. So now we're basically testing those as well with the unit price. So watch that space indeed. Good thing about this for anyone who is bullish in the real estate sector is you actually have the Tenkan-sen above the baseline. So that's positive sentiment in relation to that. Utilities, that has really crumbled. Look at that. As soon as it tested that 4-hour support line from back in October, it has just absolutely collapsed ever since and has gone right through all of the moving averages and has not stopped. We're now testing this 4-hour support line from back in November of last year. Whether it'll actually keep on going through that or not, we'll wait and see. But essentially, you can take a look, you can see that green line right there? You can just see that lagging indicator coming through and testing that support line. Whether it actually will come through and actually come back up through that again and actually respect the line, that would be your telling tale. But very interestingly now, it's a matter of who will win, bulls or bears, based on that Tenkan-sen and the baseline on the Ichimoku curve. Healthcare. Healthcare, very, very intriguing one, this one. We've got higher highs and higher lows forming, but that's really a really sharp decline in the lagging indicator. And on top of that as well, we are testing the quarterly VWAP and the short-term moving averages here on the right-hand side. Your Tenkan-sen is above the baseline, so positive sentiment does remain for now, but whether or not it can actually get itself back up and start forming higher highs and higher lows again, especially after such a big gap down on the unit price, that remains to be seen. And last but not least, consumer discretionary. Now this is a surprise. Remember only not that long ago, we were talking about looking at this only at the beginning of at the end of last week, where we were down here. We were looking at this and saying, this is ugly, a really, really ugly chart. But look at how quickly this has rebounded. We've actually rebounded in terms of consumer discretionary so hard that we are literally right back above the short-term moving averages. We're back above the quarterly VWAP as well, being the pink line, and we're also back above the 100-day moving average, being the white line. This is a remarkable comeback in any stretch of the imagination. Over a 1-week period, we have come back so far. This is extraordinary. It really, really is. So that's incredible. We are now testing the yearly VWAP whether we stay up above that or not will be interesting. And that's all tested on a gap up. That is really, really incredible. Now, whether it'll actually manage to find its way above that yearly VWAP and above, well, actually, it's already closed smack bang on the 50-day moving average. So all it really needs to get above now is the 100-day the yearly VWAP, as well as the 150-day moving average and the 200-day moving average. It does that. Consumer discretionary is back in favour, and that is very, very strong for the market. So really keep an eye on that. That is pretty much the chart of the day, actually. That is incredible. So, wow. I am massively impressed. Over a 1 week period to go up from, what's that, 109 up to 116. That is a huge, huge increase. So there must be some massive things. I'm just wondering whether that's Tesla, for instance, that's gone up so high. No, actually, I'm really surprised. I wonder what's caused such a massive increase in consumer discretionary. May have to come back to you on that. But that is a really, really big increase in terms of consumer discretionary for anyone's books. So, actually, let's have a look. Consumer discretionary. Home Depot? No. TJX? Maybe. McDonald's? No. Booking.com. That's not bad, actually. But I wonder what's actually really, really increased that dramatically. Fascinating, because they're the biggest components in terms of XLY. But that's really, really interesting as to why that's increased so dramatically. Well, there we go. Okay. So, yeah, no one has all the answers. It's really, really fascinating. This is why I love this stuff so much. There's just so much going on. It's really, really incredible. Okay. All right. Well, I think that's covered everything. I can't really think of anything else at this point in time. The only other thing I can think of is uranium. And uranium is still pretty much in the doldrums. We're still forming lower highs and lower lows on the lagging indicator. And baseline is still above the 10 consent. So we're still in a negative downtrend here, and we're still below the quarterly VWAP on that as well, and pretty much testing as well the short-term moving averages. So nothing there to look at in terms of uranium at this point until we at least get above the quarterly VWAP. And I know that's a very, very big importance as well, especially for a lot of Australian traders as well, because they love a few of the uranium stocks down here in Australia. I'm going to leave it there because I think we're actually going quite over time actually at this point in time. So let's leave it there for now. We look forward to welcoming Yash back on Wednesday. And in the meantime, have a fantastic week in terms of your trading. Many thanks to Mark, as always, for always the continuing support. And also very much thanks for everyone else who's been watching as well. I know the last one was a relatively short video in terms of 17 minutes or so. And wanted to give you a bit of a break because you're probably getting sick of listening to me. But there's quite a lot of things to be able to talk about, especially on the end of week stuff, and especially with all the sector translations and everything there too. But feel free to comment down below anything you liked or disliked from this particular video, anything you want covered, any particular tickers that are of any interest to you, or anything else that you want to basically mention, whether you like the coverage or whether there's something that you just disliked completely. Other than that, we'll leave you to it. Have a great time with your trading. I'll see you on Wednesday alongside Yash. Bye for now, and thank you so much for watching.